Good morning, everyone. My name is Mary Redmond, and I'm talking right now about the sterling Australian dollar pair. And I do like this to the upside over the next few days. If you look at it on a weekly chart, it looks like it's making a bullish engulfing candlestick pattern after kind of basing out here and forming a bottom at 150. That probably occurred this morning because the UK GDP readings came in line with expectations. There was a 0.5% quarter-over-quarter growth and a 1.8% estimated year-over-year growth in the UK economy. And if you look at what's going on the daily chart here, it did make a bullish cross on its twin RSIs, and it also broke out of a tight wedge pattern which had been forming for several days, it's actually several weeks. So if you look at these two pairs, the pound dollar can frequently be tied to risk appetite. The pound dollar often goes down when the risk aversion rises in the market, but it usually doesn't go down to the same degree that the Australian dollar pairs will. The Australian dollar is really more closely tied to risk appetite and risk aversion, and it's also more closely tied to the stock market. So what we did see this week, we saw a spike up in the volatility index, and we saw that the indices, the major indices, the Dow and the S&P, are really struggling to maintain their bullish trend that they've had over the last 6 months, and it's not really surprising. We're not really at the end of a quarter yet. The end of the quarter will come in June 30th, and the company earnings will begin to be reported in July. But we did see the Dow go below its 50-day moving average this week, and you also see in a point and figure chart that the Dow did make a bearish reversal pattern here. This is called a bearish catapult breakdown. So it's possible that the Dow could be, and the S&P could be, making even more of a substantial correction in the coming days. And of course, the situation in Europe, which seems to be ongoing, and we haven't really reached any clear resolution about how Greece is going to pay the debt which is due in their, in the 2011 period. This is going to weigh on the stock market. It's going to weigh on risk appetite. And while this may affect the pound, it actually would affect the Australian dollar to a larger degree, most likely. And the pound is the next door neighbor. They're actually a member of the EU, even though they use their own currency. And a big downturn in the European economy could affect the UK, but when the risk aversion starts, you actually get more of a move away from the Australian dollar than the pound. That's why I think that the pound Australian dollar would be better as a short under those circumstances. And if you look at it on a daily chart pattern, it does show that it's coming out of this wedge with a pretty strong degree of momentum. And you can also look at, when I like to look at the pairs, I think to myself, well, would you buy this pair now? Would you short this pair now? Well, if you look at the pound against the US dollar, I'm not sure I would feel completely comfortable shorting it here. It still is in a year-long upward trend pattern. It hasn't really broken out of that yet. It's not clear. I'm not sure that I would feel comfortable taking either a big long position or a short position in the pound dollar pair. In contrast, the Australian dollar is really making a breakdown now. It broke down below its 50-day moving average here. It looks like it's going to test this important level, which is 104.5. Breakdown below there could lead us even back to parity on the Australian dollar, US dollar. And of course, fundamentally, the pound is in a little bit more of a strong position in the Australian dollar because the Australian economy is more closely tied to China and the Asian economies, China and Japan. And if the demand for commodities from Australia were to slow, even to a small degree, you could see a big reaction in the Australian dollar. So there are a lot of analysts out now. There are some reports that are saying that China is going to experience a major housing crash or crisis, and the Australian housing market has been in an incredible bubble and it's going to collapse. I don't think anybody knows exactly how bad this is going to be, but I think it's a realistic assumption to say that there is going to be a slowdown in the rate of growth in both China and Australia in the second half of 2011. So I think that this pair is really going to be a pair which shows good upside potential probably over the next few days, the next week. I wouldn't necessarily want to hold it over the economic reports which are coming up next week. There's a pound purchasing managers index report coming up, and that can be a highly volatile report. But it's just as far as the next few days. I think if you look at it on a 15-minute chart, it does show these flag patterns. It pulls back, then it bounces up, then it pulls back here. I went long this morning at 54.5. So another pull back, and I think we could go up to the 155, 156 level, particularly depending on what goes on in the stock market. And the volatility index did move up this week. It did make a pretty significant move up, and we haven't really seen that the stock market rebounded, which it has in the last 6 months. So what we've got going on here is more likely a move to a corrective phase in the market in which the volatility will be higher. So a big downturn in the stock markets, and I think that we could actually see big momentum in this one. We could even see it go up to the $1.60 level. So if you put a stop here where the wedge broke out, which is basically the 52.5, that would be a reasonable level at which to put a stop in. If it broke below there, some major news came out of the UK, or else we had a continuation of a strong upward move in the market, then you could see a test again of the 150 level. But for now, I think the sterling Aussie is making a break to the upside.